Thank you, everyone, for joining. In a second, I'm going to turn it over to Michael Hiles, the moderator for this session. But this is the blockchain panel. Definitely one of the more exciting panels we have here, with some actual legal decision makers here to talk about their view on blockchain regulation landscape in the coming years. So, Michael, you want to take it away?
Sure. So quick intro, I'm your moderator today. So thank you to the Miami University Blockchain Club. I've worked with you guys for a couple of other events previously. I'm the CEO of 10XTS, 10xts.com, a fintech, regtech company. And so separately, I've had the occasion through my team to work with Congressman Davidson, and also a couple of our team members worked with Senator Brandon Smith here recently. And then we've got Wendy Henry today as well. So why don't we round robin, quick intro for our panelists, and just short intro and your vector of experience and your blockchain intersect. So why don't we start with Wendy this morning? Good morning, Wendy.
Morning. How is everyone?
Super.
This is my first experience as a virtual conference. I'm excited to see how this goes. Wendy Henry, I'm a partner in our government and public sector practice at Deloitte Consulting. 30-year hands-on technologist, which is where I find my joy in the world, actually working around technology, especially emerging technology. Been working with blockchain since around 2012. I took a look at it in response to the need of a conference for secure digital identity. I've been fortunate enough to have worked with teams to build multiple blockchain implementations for commercial and government.
Super. So somebody's given a little feedback. So can I ask my panelists, if you're unmuted, if you're not speaking, let's try to mute out, and I will do the same as well. I'm on headphones. So anyway, how about next? Senator Brandon Smith. Good morning, sir. Congratulations on your recent awesome bill passage in the state of Kentucky. Tell us all about yourself and what's going on down there.
Well, first, thanks for the help as we put this together. Blockchain, just saying it causes people a lot of anxiety because they think it's so complicated. And you all were able to help me get a committee to understand how important it is and how the application would help us and get it passed. But I'm a state senator. I've been in office since 1993. I was a commissioner back in the 90s. Then I went to the House of Representatives, where I served for a decade now in the Senate. I've been in leadership and committee chair for a lot of committees, so I've got a lot of experience as far as legislative ability. And a couple of years ago, I was flying back from Europe, and I read an article about an American company who had just dropped making whatever it was they were making at, just say, thermoses or something other, and they were going to go into blockchain. And I was caught by the story because it was such a random place for them to go. And I began to look at what was actually going on with blockchain. And of course, we followed what's happened since then. And there's a lot of application for government, but it's so new to so many in the government that it's taken us 2 years of working on it to get a committee comfortable enough to back it, even though I'm the chairman, to get it out. And I think that's one of the things states will face, is that a lot of these people don't understand it, and they're usually going to vote no. A no vote's the vote you don't have to explain, so it's a safe place for new members to go, or people that are uncomfortable. So I think Kentucky's ahead of the curve by getting this bill out as quickly as we did.
I agree. All right. Congressman Warren Davidson. It's not too often I get to talk to you twice in a single week. So introduce yourself and give us all the background of your heavyweight leadership in blockchain and the Beltway.
Yeah, hey, thanks for putting this together. Really appreciate this happening at Miami University, and glad you find a way to continue the conference just virtually. So I'm in DC right now. First of all, a couple of things today. Unfortunately, one of the things we haven't been able to vote on is meaningful, blockchain, crypto technology, piece of legislation. So I got into Congress in June of 2016. And obviously, a lot has happened in the crypto space since that time, but nothing's happened in Congress since then. I've pushed very hard since becoming a member of the House Financial Services Committee in January 2017. We have some of the, I guess, most momentum behind, I guess, positive legislation, but a lot of it's still a patchwork, as everyone knows, with, SEC, CFTC, and a patchwork of court decisions. So, we all recognize, kind of the history and legacy of blockchain. Certainly, the significance, people debate how significant in terms of Bitcoin is, but broadly the applicability of the underlying technology of blockchain. And really a lot of it comes down to true distributed ledger versus essentially a modified central database. So, I'm a big fan of distributed ledger, decentralized operations, and I think our laws need to be able to catch up to that framework. So I look forward to the panel and the Q&A about it. And thanks for putting this on, Miami, and thanks for all the panelists. Honor to join y'all.
Excellent. All right. So to kick it off here, I haven't had the occasion to work with Wendy directly, and I always like to do my research and homework. And so I went and did my due diligence and read some stuff that you had published on behalf of your position there at Deloitte. And you put out an article called Assessing Blockchain Applications for the Public Sector. And you talk about like the bullet points of, really what seems to be aligned with what the private sector has been going through for the past really decade in terms of just digital transformation. So in your view, from that sort of position, how would you see the nuances of digital transformation transitioning from, say, how we approach things from a private sector, but then to a public sector?
Well, so interestingly, you're absolutely correct. I don't know that there's going to be totally different issues that we're going to see one versus the other. So as we all know, right, there's a lot more to distributed ledger technology than the technology. And that's really where some of those nuances come, especially as we go through digital transformation. It's going to turn out that the technology is actually the easier part, right? We're tackling the issues around scale and interoperability, and we're starting to see maturity even in what we would consider to be, level 2, level 3, level 4 development environments, right? But what we aren't seeing is, and I think, Senator Warren or Representative Warren said that, we have to get some coalescing around definitions and standards. We have to get people comfortable. We have at Deloitte have actually started to stop talking about the technology. So we don't so often now mention blockchain when we're talking with clients. It is too scary. It's too unknown. Everybody still too much aligns it with cryptocurrency. So what we need to start talking about is what are the governance models that, government and industry, and in many instances, government, especially from a regulator perspective, are going to overlap into the business networks that are distributed ledger technology, right, with industry. They're going to co-participate. And so being able to understand what those governance rules are, which laws we need to abide by, and how you abide by differentiating laws, right? Because this knows no geographic boundaries. So those are some of the things, making sure that you get all of that aligned in addition to the technology is what's going to be important with digital transformation and DLT.
Sure. Excellent. And I guess so that tees us up a little bit. Congressman Davidson, you have worked in Congress on a bipartisan approach to a definition exercise with the Token Taxonomy Act that you guys have worked really hard to try to get some traction. And I think that, pursuant to some of the discussion that we even had earlier this week with regard to like the macroeconomy and then ultimately stimulus and infrastructure, do we see the federal government through some of the new, I don't want to say Space Force or some of the other advanced technology directives at the federal level, do we see a standard setting and maybe a framework through, the National Science Foundation, or how are we doing on that side of the equation, bridging the gap between the policy efforts, but then also just the practical application and the implementation as infrastructure at the enterprise government level? Can you give us some insight on that?
Yeah, so to pick up from that line of thinking, obviously NSF already has a standard for cybersecurity. They put that out, and basically best practices. Some debate how good of best practice it is, like anything the government puts out. But they have some framework, and the challenge really comes kind of where the government is with encryption. They don't really want it to be too secure. They want backdoors, right? They want to be able to, they want privacy theater, basically. They want the feeling and appearance of privacy, but they don't actually want that because they want to be able to backdoor it whenever they want. And I think that's why true distributed ledger technology is scary to a lot of people. They like the centralized way to be able to do a backdoor. And we've seen from the framework of the internet, it was designed to share information. And in fact, it's so good at sharing information that even in spite of the 7-layer protocols, it's not actually able to be truly secure. And in my view, Bitcoin is the most secure network that you have in computing. I'm sure there are people that would say more. I'm not a cybersecurity expert, but I think the value of a Bitcoin is a proxy for, is it a store of value and is it secure? And certainly a lot of people believe that it is, with some serious variance. And I think the other framework that's really important here is with respect to privacy, federal law still hasn't caught up to the internet era. So there isn't a real standard. Frankly, everything's governed by whatever you want to put in your terms and conditions. So imagine a financial services document, a loan document, that whatever the lender wanted to put in it is essentially fair game. And we would never tolerate that in lending, real estate transactions, business contracts, any of those things. There's a body of law that's happened. And when you've seen abuses, you see sometimes overly reactionary legislation, but either way, you see legislation. And in spite of all of the hand-wringing about the ICO market and everything else, you still never saw real legislation come through the halls of Congress. So I think the foundational piece really gets at privacy. Can you have privacy and differentiate privacy from secrecy? Distributed ledger technology is much more private than a centralized database, particularly with fake encryption that's inherently designed to be weak because it's got backdoors built into it. If you had true, sound, secure distributed ledger technology, you could still access some of that information with warrants, for example, almost like the Constitution was crafted. And it would be more secure, but the centralized database crowd seems to be winning that argument. It's not a real partisan issue. I mean, I've got a range of co-sponsors that are across the political spectrum. The most progressive members and the most conservative members are generally the least authoritarian. And then you see you have this other kind of bipartisan consensus that likes the authoritarian style of centralized control in the government, just to keep us safe kind of mindset. So I think that's really the lay of the land in terms of what it's going to take in a coalition to actually get legislative certainty, is the idea that, distributed ledger technology can be private, not truly secret, that it is discoverable, And I think I had hoped that we would build some momentum on that line of reasoning as the Mt. Gox theft was uncovered, and you could trace all of the moves, because literally there's a ledger of all the moves. So it's way more transparent than cash, and a lot of people will try to dial it in that way. And I think the last thing I'd say is, to Wendy, I think you're wise to not talk so much about the tech and cryptocurrency, because where you would think the government would react to the challenges in cryptocurrency, they haven't. And unfortunately, that's scared off any momentum behind providing some of the underlying potential of blockchain. So one of the highest potential things I think that the government could use it for is transparency and accountability for accounting within DoD, for example, because you could have a public blockchain that's for the publicly appropriated dollars, and you could have a private blockchain for the classified, operations that are there, and it would be, able to be, more secure than a lot of the things we already do. So thanks for the question.
Great. Well, I guess, so then Senator Smith, considering your most recent efforts to start putting into place in the state of Kentucky, a working group and exploring different types of applications across the state, have you and your colleagues given any thought to like use cases of where you see the potential for not only the state to develop its own framework, which I know Kentucky has been was very progressive early on in the internet era with the fiber optic bluegrass network, and now that we see you guys making moves even with like appropriations and budget attached, which is amazing. Congratulations. How do you see the rollout to these different use cases as a state across the counties and the departments?
Well, one of the reasons that makes passing a piece of legislation like this difficult is the same thing that holds back, restricts big bills like tax reform and things of this issue. And it comes down to the simple makeup of these chambers are people that may be a professor at a university, they may be a plumber, a welder, run heavy equipment, or be a butcher at Kroger. And so trying to get this conglomerate, to get this group of people together and to get them up to speed, comfortable enough to be able to vote on something is what our problem has been. And so I wanted to make, and I share that with you because there was a lot of stuff I wanted to put in this bill. I wanted to be a little bit more aggressive, as your guys know, but I had to get something that was more palatable to the general group that we're working with. And so that's why we went with the committee to put it together. The state at first really did not weigh in until they realized the bill was going to pass. And as chairman of the committee, I had to run a blockchain bill through natural resources. And so trying to keep a very fine point on the pencil in our parameters so people would understand why we were filing it, even though I knew that this was going to be much bigger than natural resources. But we were looking originally at some numbers for what are on your utility bills and municipalities and the type of transactions where a lot of your information's there. And but I think the elephant in the room all the time was it's going to be so much bigger than that. But trying to keep it, the lid on it, and the excitement that I think all of us are here today on the phone with, in the middle of the day talking about it, as we realize this is going to be a lot bigger. It's going to completely demolish parts of the internet that we've seen before and rebuild them. You're seeing what China's doing by creating its own blockchain service-based network. And they're going to incur the cost, and they're going to invite their businesses where they were going to spend a lot of capital up front to be able to operate on their network that they're going to control. And so I think it's interesting to see how China's going to do this. I don't know necessarily that a lot of businesses in the States want to be a partner with the government. We're not exactly the best partner to have, so there's a little distrust. But I do think if we can take what we have in Kentucky and build on it, I think what the committee is going to come back with is a lot of stuff we already know. But it's a lot better to have it come from the cabinets and come from the ground up to us as far as the General Assembly, because you have more buy-in. And a lot of the flack that we got in our committee was two things. One, a misunderstanding or a lack of understanding what a smart contract was. If you saw any of the debates, that almost literally caused the bill to fail coming out of natural resources, because we had one fellow on the committee who's chairman of judiciary. He couldn't get his mind around what a smart contract was and the language that we're using, where we got it, and the issue about how far this thing could go. But with those things answered and move forward, we've had more people want to be a part of it after the bill came out. That's why we had to do a Senate committee substitute, because the municipalities came. And the time that I have left the Senate as we adjourned, I've had probably 25 calls of other people wanting to get on it. But if you look in the bill, and I think the congressman can appreciate this of a good drafter, we left a lot of permissive language in there to give this committee a lot of authority on its own to go what direction it wants to and who it wants to have on the board. And if it needs the ability to expand itself, that's all built into it. And of course, we'll be back next year as legislators. We point out to people at home, don't worry about this running away. We're going to be back in 6 or 7 months, and we can always tweak it or readjust it. But I'm excited. I think it's going to go down a path that most of us that are following this realize some of the opportunities, but I think they may present some stuff that we haven't even thought about yet. But those were some of the hurdles that we had, some of the applications that you're going to see come up. And ours had the sort of laser focus on the energy utility sector, but with built-in permissive language to allow the committee to expand beyond that, which we know the Department of Local Government's going to get on this. You're going to have public records, Department of Transportation, driver's license, medical records, banking, the Financial Institute for Revenue. There's so many different applications for what we're going to do. And then the decision will be made next year about, do we do some kind of model like what China did? Does the state of Kentucky build its own blockchain service-based network, and then we invite businesses in Kentucky to do it? And if we do so without any federal oversight, is the country going to look like it does in many aspects at Quilt? All these different states have all these different network, and is that actually going to be functioning? So there will probably become a point in the discussion about, do we need to have some sort of a federal oversight regulatory group give us some guidelines to go for, so these things all mesh up and it works. If not, it'll be a mess.
Agreed, 100%. It's definitely interesting to watch the policy evolve in DC, even as we speak right now. In fact, earlier this week, Congressman Davidson was a guest on my podcast, Digital Dollar, that I have with former state rep Jonathan Deaver here in Ohio. He's part of the 10XTS team now. And so we've seen a couple of efforts to put digital dollar legislation into the two most recent drafts of the stimulus bills that have gone out. Now, I want to direct to Wendy first and foremost. It appears that there is a consortium building from former CFTC chair Chris Giancarlo, who retired at the end of the year last year from the Commodity Futures Trading Commission, to head up the DDI, the Digital Dollar Initiative. And I'm sure that you at Deloitte has tracked, Accenture has also thrown their hat in that ring, and they're trying to convene this panel of, large company and just different stakeholders to bring advisement around the, the various aspects of a digital dollar policy. And so given that, we see like, all of the big consulting players and even some of the big public network cryptocurrency providers vying and lobbying in DC, I'll call out Ripple for that one. How do you see Deloitte intersecting and the work that you guys are doing from your interesting perspective as a very large consulting group and integrator building practices? How do you guys see connecting the dots? Because this just appears to be this massive overhaul of literally every financial, accounting, trading, asset management, literally every aspect of all of this is going to be touched in some way at some point when the US Treasury says, here's the API, go to it.
Yeah, so that's truly in its infancy. As a matter of fact, we're members of the Chamber of Digital Commerce, and there's a meeting at noon on this very issue to start discussing some of this stuff. So I would say stay tuned as far as that goes. We are fortunate, and I specifically am fortunate enough to be working with Treasury and completed a proof of concept around tokenization of payments with fiscal service. And really what that was it was to, test the waters of how to apply, how to bring transparency, accountability, and auditability to some of the financial transactions. And in this case, we did grants management. So NSF was part of this, as were several universities. And, really it was a learning journey. I mean, I think that's where government is right now. Hopefully it'll transpire into some of the things where they really can realize the efficiencies that can be gained as a result of this, as well as the accountability and transparency. But there's a lot of play. It has to start, we have to start talking about this from the value drivers and reasons that we're doing it. There's the sensationalism around digital currency, especially we know China's supposed to be launching theirs, although they were also supposed to launch BSN yesterday, and I don't think it launched. So, or it's not, at least it's not in the press, and I don't have an insight into China right now. But, there is a lot of talk around it, but what China's doing, and when we talk about digital currency, I think people have to be very careful about what that means and what the definition of it is, because it's very different than something like a Libra or a stable coin or, a utility coin. And so in a world that we run in today in the US and state governments, where there is so little clarity and certainly fragmentation around not only legislation, but definition, this is going to get far more complex.
Totally agree. Yep, totally agree. Thank you for that perspective. Congressman Davidson, so then you have just been most recently appointed to a task force to try to reopen up the nation from the impacts of COVID-19. And, we've had these discussions. Do you see an acceleration towards this digital transformation conversation coming? Because I'm really intrigued about how we treat our digital, entire digital infrastructure as critical in national security. So it's not just the financial side, but then how do we create a framework that does become that coalition between private sector interface and then with the states, with like the things that Senator Smith and the group in Kentucky is considering. How do we, as a federal policy, how do we shape that and present that and ensure that that's part of the conversation, so that blockchain becomes far more than just cryptocurrency and Bitcoin being used to buy drugs on Silk Road, as some of the folks have asserted on public record in committee?
Yeah, good question. Safe to say Brad Sherman and I will continue to disagree on where we should be going. But it's a good question. And, nothing about what we're doing inherently means that we're going to do anything about digital. It could mean that we're going to continue to kick the can down the road and be scared of doing anything from a policy framework. That would be very disappointing, and it would be a massive missed opportunity, as has been discussed. I think about blockchain and the underlying possibilities with this space, kind of like the internet. I mean, in the early days of the internet, there were all these use cases that weren't quite ripe yet. Some of the dot-com bust now are killing it with, just groceries, for example, as an example. It wasn't ripe in 1999, definitely ripe by 2019. But we haven't even begun to think of all the use cases for the internet yet. So we are very, very early stage, very infant stage of the possibilities with this new architecture. And so I hope that we can time it so that we make use of these possibilities. And I think, as Wendy highlighted, talking about the technology would be akin to Congress trying to get into the weeds about how, IT, internet protocols, worked and resolve all that. And well, should we go with this protocol? And they didn't do that in Congress. They just said, this is going to be a thing. We should kind of get out of the way and let them innovate. And unfortunately, there's been a lack of resolve to do that. Now, when you look at, so what do we do about this discussion that we were just having about digital dollars, reopening the economy, monetary policy, and the potential of the space? A lot of it started, let's just say, it wasn't the first idea about digitizing money, but Bitcoin really built the momentum behind this space. And a lot of the entire crypto space goes back to the idea of preserving the value of money. Bitcoin very clearly has a concept of fixed supply. So the demand can change it, but the supply can't be distorted by a central authority. And if you think it can, try to subpoena the CEO of Bitcoin, right? Serve papers at their corporate headquarters. So they're still searching, and I assume they will always continue to search. We'll see. But I don't know that central banks are going to allow a true decentralized competitor or even a centralized competitor for the monetary system. The system we're doing right now in the United States of America, and frankly, broadly around the world, is monetary inflation. And people say inflation, no, prices are stable and we should be worried about deflation. Well, right now, I think a lot of the world is worried about deflation because there is no demand, there's no buy side for most of anything, so you don't really have pricing mechanisms. But even when the economy was really good and stable, we had disruptions. The repo market, the repurchase agreement market that makes our debt system and our credit markets work, was broken in September. The Fed's been intervening way before COVID-19 was on the radar screen. And that's because in monetary inflation, what gets distorted isn't necessarily the price of goods or services. It certainly isn't the value of labor. It gets distorted at the value of the equities primarily. And when you distort the value of the equities, publicly traded equities, you inherently distort the value of the debt. So you borrow against the overall enterprise value, and your debt to equity ratio is off of inflated equity. So therefore, you have distorted debt. Not to mention practices that create leverage on top of leverage on top of leverage in a seemingly endless stack of structured credit. So that creates a massive amount of demand in the repo market for dollars because of inflation. And in my view, that is a huge factor in the explanation of the wealth gap, because the people who have access to these assets have had the value of those assets inflated and have become much more wealthy than the people whose recourse is to labor, or even small companies, right? Privately held businesses aren't as distorted because the base explanation is they're not as liquid, but net of the liquidity preference, they don't have the same system of monetary inflation entirely available to them. Private equity kind of started to bridge that in a lot of sectors. So what are we going to do about it? In the near term, we don't really have a lot of options. You could go with the purists who say, look, viruses are naturally occurring, so everyone should have reserved against this risk, and there's no lifeguard on duty, fend for yourselves. I'm sympathetic to that line of reasoning, but here I talked to a business owner as the best use case. The government literally ordered his business closed, ordered all the consumers to stay away from his business and businesses such as his, and for good measure, they put physical barriers at the entrance to his business. So are we really supposed to tell this guy that you were supposed to reserve against this risk? I think no, and the broad consensus in Congress is that we should bridge that gap with some form of stabilization. But there is no buy side for that much debt. It's just printing money at the Fed, at the Treasury, and the Fed propping it up. So not only is the Treasury's balance sheet growing exponentially, the Fed's kind of separately is growing on its own path due to open market operations and quantitative easing. Again, so that's not sustainable. It wasn't sustainable in good times. And the question is, at what point will it no longer work? If you look globally, you have the same pressures, right? So I think just like in the dilemmas that forced Bretton Woods in the first place, that forced the exit of Bretton Woods in the 70s, and effectively the petrodollar, we're coming to an era where everyone's balance sheets will be so distorted that they have to collaborate to do something differently. In my view, Christine Lagarde has been the voice for where this is headed. I don't agree with that would be the best solution. I just think it's the one with the most momentum, which will be for the balance of payments issues and international trade, to create a synthetic currency. It's a basket of currencies that a lot of global companies would like, because one of the biggest markets in the world is the global hedge against currency risk. So for a lot of these things, people would want to settle in a more stable platform. So it has a lot of momentum. And frankly, a lot of countries in the world want to see this because it weakens the United States' control on the global financial system. And it also, to the one point that I agree with Brad Sherman on, it inherently weakens the United States' ability to lever the global financial system to do things like sanctions, like anti-money laundering, like defense against terrorism, and all these things. So the real question is, I think there's momentum behind that, whether governments and central banks do it, or you have alternative means. And the United States should be in a position to lead in that transformation. And so I think that's the real discussion. Obviously, the potential for that is accelerated because of the monetary inflation that's going on globally right now. Sorry for the long answer.
No, it's great. And it's, back to pursuing. I see you've had some time to really digest our conversation. We got sort of into the weeds on that previously this week. And and I've been hit up a whole bunch by folks wanting follow-up information, just even some of the more refined thoughts that you just expressed, Congressman. So thank you. Senator Smith, so, it's interesting. We brought the discussion about the macroeconomics and the currency policy. But one thing that you, as a member of the Kentucky Assembly, is you're always cognizant of currency markets, debt markets. How do we actually pay for all of this infrastructure and technology? And pursuant to our current march towards slowdown in credit markets, in particular, even municipal, state and local bond markets appeared to be iced. Do you see the blockchain becoming a mechanism to bring digital transformation at the state level to provide broader services? And, how do you see that actually impacting, or am I looking at this the wrong way from a efficiency and an improvement standpoint?
No, I mean, I think that's probably going to be one of the biggest issues about how we go forward, and each state's different approach. If you look at the Chinese model, where they're going to release, the government's going to do its own network, and then you as a business person participate in it. And of course, I don't know that I'd want to be business partners with China. I mean, I think that's one of the reasons that some of the people that are their business partners want more transparency for the issue about the Chinese knockoffs on luxury goods. There's been a lot of issues for why they would want that. But for us in America and Kentucky, how do we go forward being able to get somebody to make an initial investment at their own cost, or maybe as what we're terming now as P3, public-private partnerships, to go forward? And then at what cost do you let other people, sign on? I mean, government's good at this. I mean, we will run a water line and a sewer line through a neighborhood, and then you as a homeowner will come right to your property line, and then you will have to get the meter and run it out. The same thing we're doing with the dark fiber across Eastern Kentucky and many rural areas of the nation is we're running the dark fiber through your community, and then you have to pay to connect yourself. So if this premise is going to work, then we need to have the government in a role, and then certainly the general public buy-in, and then the businesses buy into it. One of the models I like that the government does is how we treat military bids. And for example, if we want a new fighter plane, we'll go out and we'll lay out what we want. We want a plane that will fly this distance at this speed, carry this payload, yada, yada. And then we let private industry go out there and scramble around to come up with this. And then they do a presentation. We go see, sometimes it works, sometimes it doesn't. Then whoever gets the bid, that information is then disseminated through the rest of them to make everybody competitive to see where they may have failed. I like this idea because you have to come, private industry rather than the taxpayer has to foot the initial R&D, and then they come to us and then they win the bid, as opposed to a period of time in America where we were going out giving 25 companies, big sums of money and then hoping we had a winner in the mix. I don't think that's a good way of spending tax dollars. I would much rather sit down and say, Kentucky needs a blockchain network that will do this, 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 and this, and then let industry and universities and academia compete for it, to make a presentation for us to actually see what will plug in and meet with the people from this committee that we've got together and other leaders. And then whoever gets the bid, then that information's shared. And so maybe somebody that didn't get it this time comes back next time with the next level of what we're going to do, or the second generation blockchain structure. And then we grow like that, but that minimizes the amount of money that the taxpayer has to put into something that could fail. And we're littered with those. I mean, Kentucky's had our own share of that. And so I think that we have a much more successful route going through with a P3 concept and letting industry do the R&D, spend their money, and then bring us the results. And then we can award a bid and keep moving forward. And I think that's probably what you're going to see. And we're hearing things now that we're saying this is impossible to do. But if you remember Zillow, and when Zillow came out, people thought this was crazy. You cannot buy a home without being there. You can't do that. Of course, you actually can. And people have the app on their phone, and properties now, it's commonplace to be able to do it. But there was a period of time when industry and the general public thought this was ludicrous. There's no way that you can do this. So we don't know what next year is going to be. By the time the General Assembly comes back in next January in Kentucky, we have no idea what will happen in that short amount of time. So I think what binds us all together in this discussion is the fact that there is this wonderful possibility of what blockchain can do, and some of the things that it can't do right now. But the fact is, I think if you're in this discussion and this is in your terminology, then I think you're ahead of the crowd on it. And I'm proud of Kentucky. I mean, we're often dead last on a lot of these things, but Kentucky was out front and the front of the pack to be able to be involved in blockchain. And I think we'll benefit from that.
Yeah, and if I can jump in real quickly on that, just I totally agree with you. And I also think that industry is willing to do that with government. One of the things that we're looking at, which also has to do with how do states, right? How does that federal versus states come together? I've had the pleasure of speaking with multiple state legislatures over the past year. And, one of the things that we're looking at is how do you get, because once again, going back to, blockchain's not a party of one, right? And how do states start to also go on the learning journey that we see federal government starting to embark on? And that was every state has integrated eligibility, and there are problems with fraud in integrated eligibility. So is there a way for states to come together, right? And through the use of distributed ledger technology, augment, right? Because it's just connective tissue. It's not going to replace those integrated eligibility systems. Everybody keeps their own, but begin to be able to bring some efficiencies at the same time, really getting a quick win on distributed ledger technology. And we're looking at a co-invest, right? And that can come in a couple of different formats. That can come in formats where industry builds and then turns over, and it gets licensing. But what we're more interested in is what are the savings, and then so you also can get into some what's called value-based billing, right, where the risk is shared between government and industry. So there's some really creative models out there. But I think, to your other thing of what happens, do we get to this patchwork quilt? I think there's opportunity for a lot of the states to start thinking about what are some of those common pain points that exist in cross-state interaction that will allow for you to naturally start to create this network between the states that you then can start to leverage for your business bases after you've figured out, right, through your own kind of usage and solving some of your own problems, what that needs to look like. So just two things there to add to the conversation.
Great. Super. Thank you. So we're coming up here on time. I don't see any open questions in the Q&A queue as a moderator. So just briefly, if anybody has any quick questions, jot it in. I will ask a single question, and then I'd like to get each of my panelists' answer on that. And so given each of your proximity to the technology and the government, will we ever use blockchain for voting? And if yes, how long from point A today, from now? Wendy.
I think given especially the situation we're in today and the world we're living in, maybe for the next little bit, that it is something that we have to look at. And when we start to look at how people vote remotely, whether that's by mail, whether it's absentee ballot with drop boxes, as some of the states do, or if it's on an app that they can do digitally. The only way that we can potentially think about doing an app is to use some form of distributed ledger technology. I think it still has challenges, right? Because it's all predicated on a secure digital identity, as is everything in the blockchain world. But I think it is in our future. I think we're probably not ready for a total digital experience. And so maybe what we start to look at and think about is some type of hybrid.
Congressman.
Yeah, Wendy hit my core point is the only way it would work is you would have a solid high functioning identity token. And until that's high functioning elsewhere, I don't think it's going to be able to be functioning in voting. As an example, we've had all kinds of ways to establish identity for a really long time, and we don't yet have a clear consensus on voter identification requirements for voting. Thankfully, in Ohio, we have a sound voter ID law, and we've had an early ability to request an absentee ballot and vote. So we have a better infrastructure to deal with mail-in ballots than many states do. But the framework that's proposed, for example, by Speaker Pelosi, would be far worse than what Ohio's system is, and it would federalize her bad ideas about sorry to politicize it, my views on it. And that would be the core debate. And we haven't resolved it for in-person voting. We're just now touching our toe in the water to try to resolve it in a consensus for mail-in voting, and mail's been around since the country was founded. I think we're a good ways out in terms of a consensus to allow to do it in a very secure, traceable way that the potential would be there under the technology. But I think the public consciousness is probably, maybe in my lifetime there will be something in there, but this is one of the slowest moving things in American political life.
Senator.
Here, sorry. I think it's a great question, because as these elections become more contentious and the victories of margin are much thinner, and all the issues that are out there about, fraud in people's mind, being able to cast a vote that counts. I think it's a good test model, but if it fails, it's also a national sort of disaster in the sense it could set blockchain back, years and years and years. So I think it's a possibility. I think there's going to be tons of advantages to it. I mean, I like the security aspect for it. And there could be a company that comes forward that wins a government bid to do a test case in maybe Iowa and get in there and see if they can prove some good data. I mean, people are pretty sharp. We're pretty tech savvy in America. And if you don't believe me, ask any 15-year-old And I think if we can show some successful data and people are comfortable with it, they prove that every day with the amount of unbelievable content they put in a cell phone that can be picked up anywhere. But people have faith, whether it's needed or not, or smart, in data and devices. And I think that if you could prove that it works, I think you'd have buy-in. I mean, I think that we're hungry for more tech. People love it. They're comfortable with it. It's a whole another generation coming in behind us. It's all they know. And if there's some data to show that this works and it's efficient and you don't have to stand in line, and if you get off work and you're tired and you have the chance to eat dinner with your family or go vote, and you don't have to make that anymore, and you can vote and still do vote, I think people are ready for that. I think they do it, and could be a whole new opportunity for some industry or some business to develop this and make a lot of money, which is what I hope they do.
Excellent. All right. Well, so we ran over time a little bit. This has been an amazing panel. Thank you, all three of you. Wendy, Congressman, Senator, absolutely appreciate everybody's time today. And this has been an amazing discussion, and look forward to connecting personally with each of you again as well soon. So thanks. Clap.